In the coming weeks and months, Solana is likely to experience something called a wave 3, normally the biggest, strongest, impulsive wave to the upside in a macro degree sequence. But today we're going to dive into day number 3 of the crowd psychology, and we're going to backdate the data when Solana did its wave 3, but we're already starting to get the thinking on why does the psychology play out time and time again, and we can rely upon it. It was proven over decades and over centuries, and I'm going to show you some key secrets. And if you can get this concept in your mind, you can ignore the news and just watch the technicals, and it gives you more information. So if you like today's content, like, subscribe, hit the bell notification. But let's dive straight into today's day 3 on crowd psychology, on why Elliott waves are one of the most powerful tools you're ever going to come across. All right, so crowd psychology. We've got the market. The markets tend to move in a 1, 2, 3, 4, 5. So if you've been following this series and follow me, you'll know that the foundation of everything that I do is Elliott waves. Ralph Nelson Elliott figured out these market patterns and sequences tend to unfold, and there's only a limited number that there are. And the most common is 5s and 3s. 1, 2, 3, 4, 5, ABC. And today we're going to focus on this part. And we use Solana as the example because it's just a textbook example, but Bitcoin was also the same, Ethereum the same, BNB the same, and so on and so forth. So what are the key points that I want to get across to you today with this? Well, wave 2 is a test of lows. So fundamental conditions often appear to be as bad or worse than the previous bottom. Where's the previous bottom? Where's the beginning of wave 1? So if I just pull this up so you can really see it, down here on the bottom left, underlying trend is considered down in a wave 2, right? And we're experiencing that right now on a macro degree. I'm going to show you on an intermediate degree when we backtrack Solana, but where are we right now on a macro degree is literally a wave 2. So this is what we're experiencing right now with Solana, with Bitcoin, with Ethereum, with BNB, and many others. It does not carry to a new low. So wave 2 from a technical position does not go below the former low. Really important. And wave 2 is a partial retracement of wave 1, a severe test of conditions that existed at the actual bottom. So it's a retest of this. So what we're going to do is we're going to jump into Solana right now. And here we are. And by the way, I'm covering Elliott Wave. So I've actually got an Elliott Wave Masterclass that shows you how to do this. And I'll break everything down. So if you're new to this, or even if you're well seasoned, you'll pick up some of the key secrets that, especially in crypto, tend to apply time and time again. So it's in the description link below. It's literally free. I've put a lot of time and energy into it, and I think you'll get a lot of value. So with Solana, so we've taken the date back to May 2021, right? And we're doing videos on this, and we pegged this wave 2 low. So what we're going to look at is, so in the last video in this series, we were talking about this wave over here, this wave 1, which broke down to a textbook 5-wave sequence. After the sequence, what you want to know is a movement below the low, if I can get this down here, is one of the first indications that the 5-wave top is complete. So we had a massive bar to the downside. So if I just zoom in like this, we had a massive bar to the downside. But there's a few things we want to let Solana play out, right? Always we want to anticipate a minimum of 3 waves. So I remember when I saw this over here with Solana, my initial thought was, okay, that's 3-wave structure to the downside. With Solana, we've got what looks like to be some type of ABC sequence. And we drew this out at the time. It formed one more wave, I believe it was. And then as it was unfolding, what we were saying close to the time is what we're looking for is for the price to go either above this swing high, or if you're watching the market closer, is these mini swing highs. That gives us a strong indication that Solana has hit its bottom. And I think what we got was the market then just really took off, right? Then it took off. So what does this tell us? And why am I even bringing it to your attention? Well, first of all, this position right now, back in 2021, this was like May, June, July 2021, is literally the same position that we're in right now, but on a more macro degree. When we zoom out, we'll see this whole 5-wave sequence, just like this yellow. And I'm gonna let me make it even clearer for you. A, B, C. If I can get this low, I'm just going to change the color to orange. It's in orange and yellow. There we go. right? This is how the correction played out. But what we want is we want to have with high probability being able to project these wave 2 lows. Why? Because wave 2s actually act as a launch pad for like a rocket, and the rocket is wave 3. So this is like a launch pad. And for successful wave 2s, at the end of wave 2s, and we get them right, the wave 3 is the trend you want to really trade, because it takes off. And when it takes off, it really takes off. But the principles of wave 2 are this. So if we just go back to this, it's a partial retracement of wave 1 and a test of the condition that existed in the actual bottom. So again, if we just go back to this, here, this is actually a retest of this down here. And a partial retracement means, I'm just going to do some basic Fibonacci retracements. And let's just clean this up. I'm just going to get rid of the waves and this as well. But this is how we use the information, right? We'll do the pattern count. We'll back it up with a retracement from this high to this low. And most corrections for wave 2 end between 50 to 62%. And you can see this one went perfectly to 62%. And this gives us valuable information in advance. Now, this is purely based on technicals, psychology of buying and selling behavior, mass herd psychology of euphoria, pessimism, optimism, all the emotions of fear and greed playing out. So what we're going to cover in tomorrow's video is day number, I think it's day number 4. It's really so we've done the bottom, we've done wave 2, wave 1, wave 2, and then we're going to move into wave 3. Wave 3 tends to be the impulsive wave. It's the biggest wave that will give you the most amount of profits. We saw a micro wave 3 over here. You see this yellow wave 3, this one? You see how much bigger this is than the former wave 1 and wave 5. This is a very common characteristic of a wave 3. And it's why we always, on different time frames, want to be able to identify the end of a wave 2 so we can ride this wave 3. That's the one that's what we're in this game for, is wave 3s more often than not. So here is the confirmation that this swing high is taken out. This low is about to look like it's going to hold, and then we'll look for long-in opportunities. But wave 2s are a beautiful thing, but this psychology will play out again and again and again. And your job as a trader is just to find wave 2s with an ABC correction. And if you can do that consistently, you become a hugely successful trader, as long as you have some entry strategies and some proper risk management. But I highly encourage you to take my Elliott Wave and Fibonacci Masterclass. I cover wave 2s in a lot of depth. It's one of my favorite waves. It's the ABC structure. It's the retracements, something called alternate price projections, and then there's a few other things that we want to be aware of with wave 2s. But in tomorrow's session, what we're going to cover is wave 3, right? Day 4 of this psychology, crowd psychology, on why Elliott Waves works. Why does it work? And I personally just ignore the news. I just don't watch the news at all. So it allows me to meditate on the price action. So let's finish on a quote today. We covered a lot today. Let's go with, I think we're going to go with chapter number 2. We're going to go with chapter 2. And it's Warren Buffett. It says, rule number 1, never lose money. Rule number 2 is never forget rule number 1. Now, there's a bit of a paradox. With the nature of trading, taking a loss is just a part of the cost of doing business. That's just the nature of it. But what we want to do is have acceptable capital exposure per position. We want to have high probability setup. So when we're right, we really ride that trend. And when we're wrong, we lose a little amount. And do that consistently is how you win as a trader. It's the art and science. And your job is to learn the basics and then apply them consistently and let the market do what the market's going to do. All right, I'll see you tomorrow for day number 4 of the psychology series, the mass herd psychology, where we're going to cover wave 3, the characteristics of wave 3 and why we want to be aware of it. Massive profits to be made in wave 3s. I'll see you tomorrow.